Nvidia, the undisputed leader of the AI chip world, is suddenly seeing its stock price drop. Why? Despite powering everything from ChatGPT to medical breakthroughs, Nvidia's shares have taken a hit, leaving investors puzzled. When the top player stumbles, it sends shockwaves through the entire AI sector. Is this a sign that the AI stock rally is over, or just a temporary pause? Nvidia's dominance makes any dip in its value a market-wide event, forcing investors to question if the AI boom is cooling off. The real story isn't just about Nvidia, it's about shifting market sentiment and the psychology of investing. So, is this a red flag for the AI industry, or a green light for savvy investors looking for opportunity? To understand Nvidia's recent slide, you have to look far beyond the borders of Silicon Valley. The story isn't just about one company or even one industry. It's about how interconnected our world has become, and how events thousands of miles away can send shockwaves through the heart of America's tech sector. Right now, global tensions are rattling markets everywhere. Headlines about conflict and instability in the Middle East are dominating the news, and investors are watching nervously as uncertainty grows. Escalating conflicts in the Middle East have triggered a wave of anxiety, making investors question what the future holds. The ripple effects of these events are felt instantly, thanks to the speed of modern information and trading. When uncertainty rises, investors tend to pull back from high-growth tech stocks like Nvidia. Instead, they seek out safer assets, things like government bonds and gold, which are seen as havens in turbulent times. This risk-off attitude doesn't just affect one company. It sparks broad selling across the entire tech sector, and with Nvidia at the very top, it often gets hit the hardest. It's important to remember, this isn't about Nvidia's performance or its business fundamentals. It's about investors everywhere trying to reduce risk and protect their portfolios when the world feels unpredictable. Automated trading systems and fear-driven selling can quickly amplify these moves. What starts as a cautious retreat can snowball into a domino effect, with prices dropping faster than anyone expects. Even the best companies, those with strong profits and bright futures, can get caught in the storm when global sentiment turns negative. No one is truly safe when panic takes hold. The result? A swift sector-wide sell-off that drags down even the strongest names, leaving investors scrambling to make sense of the chaos. Nvidia's dip is less about its own story, and more about the psychology of global markets, how fear and uncertainty can override logic, even for the most successful companies. When the world gets jittery, even kings can stumble. Market leaders are not immune to the forces of global anxiety. The lesson? No company, no matter how dominant, is immune to the tides of global uncertainty. In today's world, every market move is part of a much bigger story. Is Nvidia's drop really a crash or just a breather after a historic run? The stock is still far above where it was a year ago, even after the recent dip. Pullbacks are normal after meteoric rises. They let the market reset and shake out short-term traders. This isn't a collapse, it's a healthy correction that could set the stage for future growth. Long-term confidence in Nvidia's AI leadership remains strong. Dips like this often become entry points for investors who missed the initial rally. The key. As long as AI chip demand keeps soaring, Nvidia's story is far from over. Sometimes a pause is just the setup for the next big move. Competition in the AI chip industry is intensifying. AMD has just unveiled a powerful new AI chip, aiming to directly challenge Nvidia's long-standing dominance in this rapidly evolving space. The stakes are higher than ever, as both companies race to capture the future of artificial intelligence hardware. But Nvidia's true advantage goes far beyond just producing cutting-edge hardware. At the heart of its success lies the CUDA software platform, a robust, industry-standard toolkit that has become the backbone of modern AI development. CUDA enables developers to unlock the full potential of Nvidia's GPUs, making it indispensable for researchers and engineers worldwide. Years of relentless investment and innovation have built a thriving, loyal ecosystem around Nvidia. This community of developers, researchers, and partners has grown over decades, making it incredibly difficult for competitors to lure them away. Even if AMD's latest chip matches Nvidia's performance on paper, the reality is that switching platforms comes with significant costs. Developer loyalty, familiarity with Nvidia's tools, and the sheer scale of existing software built on CUDA keep customers firmly rooted in Nvidia's ecosystem. The recent dip in the stock market has impacted both Nvidia and AMD, highlighting that investor concerns are driven by broader macroeconomic fears. not just the rivalry between these two tech giants. Market sentiment can shift quickly, affecting even the strongest players. Nvidia's Moat, built on its powerful software, vast ecosystem, and deeply entrenched customer base, remains exceptionally deep and difficult to cross. This foundation gives Nvidia a unique resilience in the face of new challengers. The AI chip race is heating up, but Nvidia's lead is about more than just raw speed or performance. It's about the entire infrastructure, support, and trust the company has built over years of leadership. For now, most analysts and industry experts still see Nvidia as the undisputed king of the AI chip market, thanks to its unmatched combination of hardware, software, and community support. Ultimately, the biggest threat to Nvidia isn't just competition from AMD or others, it's the unpredictable mood of the broader market and global economic forces. Oracle just reported explosive growth in its cloud business, fueled by massive AI demand, an announcement that sent ripples through the tech world and caught the attention of investors everywhere. The company's cloud segment is seeing unprecedented momentum, with customers racing to adopt AI-powered solutions at scale. And at the heart of this surge is Nvidia, the main chip supplier powering Oracle's AI infrastructure and much of the broader AI revolution. Logically, this kind of blockbuster news should have sent Nvidia's stock soaring, as it signals robust demand for their cutting-edge chips and technology. But surprisingly, the market barely reacted. Despite the positive headlines, Nvidia's share price remained mostly flat, leaving many investors puzzled. Why? Because right now, fear and macroeconomic uncertainty are drowning out even the best company news. Concerns about inflation, interest rates, and global instability are weighing heavily on investor sentiment. When markets are gripped by risk-off sentiment, even the strongest fundamentals can be overshadowed by emotion and caution. For long-term investors, this disconnect between company performance and stock price can actually be an opportunity to look past the noise and focus on the bigger picture. This kind of market environment often creates windows where strong demand and growth stories are temporarily ignored. But make no mistake, the demand for Nvidia's chips is real and growing, driven by the relentless expansion of AI applications across industries. Even if the market chooses to look the other way for now, the underlying fundamentals remain strong and persistent. Major corporations are investing billions in AI infrastructure, betting on a future where artificial intelligence is central to their operations and growth. And Nvidia is at the center of this transformation, supplying the essential hardware and expertise that make these advancements possible. The market's focus will eventually return to fundamentals as uncertainty fades. Until then, patient investors can find value where others see only risk. Positive catalysts can be overlooked in the short term, but they don't disappear. They quietly build the foundation for future gains. Sometimes the best opportunities are hiding in plain sight, waiting for the market to catch up to the reality of what's unfolding. While Wall Street obsesses over daily swings, Nvidia's CEO Jensen Huang is building for the next decade. He's forging global partnerships, investing in AI ecosystems, and embedding Nvidia's technology into national strategies. These moves create future markets and ensure long-term demand for Nvidia's platform. Strategic collaborations in Europe and beyond are laying the groundwork for new revenue streams. Nvidia's leadership is focused on tomorrow's innovations, not today's headlines. For investors, this long-term vision is a powerful reason to look past short-term volatility. The company's value is rooted in its ability to shape the future of AI. Nvidia's history is full of sharp corrections, followed by spectacular rebounds. The company has reinvented itself time and again, thriving through every challenge. Today's dip fits a familiar pattern: volatility, doubt, and then renewed growth. The AI revolution's demand for computing power hasn't changed. For patient investors, these pullbacks have often been golden opportunities. Is this a warning sign or a chance to buy the leader at a discount? Let us know your take in the comments. And follow for more insights on the future of tech.